Welcome to Drill Down Earnings, the latest quick look at the results from Oracle, fiscal fourth quarter of 2024. From Oracle, I'm Cory Johnson, Chief Market Strategist for the Futurum Group, and I'm completely biased. Don't believe anything I'm about to tell you because I own this stock and a bunch of the stock. And the stock's up a lot in the aftermarket, and I'm kind of giddy, but I'm going to tell you what the quarter looked like, warts and all. Some of it was really good, some of it wasn't. We're going to get into that. But we want to go beyond the beat or a miss. Was it a beat? Sure. Maybe that just means they managed expectations very well. But let's look at the hard numbers here. They announced fiscal and fourth, as I mentioned, year end as well. The big number that jumped out at me is the one they put at the top of the press release, which is their remaining performance obligations. So forget what they actually did in the quarter. They booked a lot of business they have yet to deliver. And that number is now at, just impossible to imagine, $98 billion. And it's up 44% on a year-over-year basis. So this business is, the salespeople are out there doing their job, booking a lot of business, and they've got a lot of business they can count on going forward. Well, earnings per share were just fine. Total revenues up just 3%, $14.3 billion. But as I mentioned, there's total remaining performance obligations, bookings, if you will, way up to 44%. And in particular, within their results, their cloud infrastructure business up 42%. It's only a $2 billion business for them, but it's one of the biggest businesses they have, and it was pretty impressive. Now, there were also two press releases that came out with their earnings release. Those awesome people at Oracle, the PR people there, working so hard in the middle of the summer. They're great. They had to put, can you imagine all these press releases? One of the big ones was OpenAI picked Oracle's cloud infrastructure, and also, of course, they're working with Microsoft Azure. We know about that, but working with Oracle Cloud, OpenAI is the hottest company in the world right now, growing and spending billions of dollars. From what we understand about this business, it looks like they've been spending a lot of that with Oracle, and that helped the stock rise quite a bit. They also announced another deal with Google Cloud in the quarter that they're going to have some infrastructure working on Google Cloud, Oracle infrastructure, so Oracle software, if you will, working with Google Cloud. That's great news. They've already had a partnership there, but that's growing a lot, and that's really great news. Now, as I mentioned, the revenue growth dipped down to 3%, not fantastic in the quarter. But the operating margins are fantastic for this business. Again, I'm biased, but 33% operating margins. I mean, this company is throwing off something like $12 billion in free cash flow every quarter. They're just a fantastically profitable company, minting cash and booking business. Cloud services and license support, still the biggest part of their business. But I want to focus on the cloud and on-premises licensing business, because that's been really staggering. It's up one quarter, it's down the next. Now it was down 15% on a year-over-year basis, but no one's paying attention to that with RPOs surging. Again, up 44% on a year-over-year basis. So how did the stock react when the numbers came out and the press releases came out? Well, like I said, it went way up, and I'm happy and I'm biased, but up 8% is fantastic. And when we look at the stock for the year, up only 13%, but really a lot of volatility in there, and the stock has taken some big dips over the last year or so, and then seems to really rally back strong. Interestingly, when this company's reported earnings in the past, sometimes the stock really takes a nosedive. Quite often it was trading at like 120 or so, it would dive down to $100 a share, and then eventually gain its way back. They'd announce earnings, it would dive again, then it would gain its way back. This time with earnings just going straight up. All right, so founder of the company, now the Chief Technology Officer, Larry Ellison, always colorful, one of the richest men in the world, and he's got a rich vein of color in his commentary. Here's what he had to say on the conference call.
This AI race is going to go on for a long time. It's not a matter of getting ahead, just simply getting ahead in AI, but you also have to keep your model current. And that's going to take larger and larger data centers. And some of the data centers we have that we're planning are actually even bigger. Some are getting very close to, dare I say it, a gigawatt, which is a pretty good sized city or one enormous AI cloud training data center. No one else can span this range. And in every case, we have unbelievably fast networks that are a part of this. The data centers we're building include the power plants and the transmission of the power directly into the data center, and liquid cooling. And because these modern data centers are moving from air-cooled to liquid-cooled, and you have to engineer them from scratch. And that's what we've been doing for some time. And that's what we'll continue to do And currently, we are leading the pack in being able to deliver that quality and that scale of data center.
So from Larry Ellison's mouth to God's ears, we shall see. All right, what's it all mean? What's your big drill down earnings takeaway? I'm going to give you one number that will tell you a whole lot to remember about this Oracle fourth quarter right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Oracle just reported fourth quarter 2024 earnings and, of course, the results for the entire year, fiscal year. Here's what really stood out and the numbers you really want to remember here. So remember, 3% revenue growth for this company, $14.3 billion. They announced some really big deals with OpenAI and Google Cloud that really had the stock jacked in after hours trading, which made people like me who own it really happy. I'm biased. I can't help myself. But look, the big number, the 44% RPO growth, I think the really big number to remember here is $98 billion. This company has $98 billion in surging remote renting performance obligations, RPOs. And that means business. It's going to show up on the income statement eventually. Good news for Oracle and some of its shareholders. All right, check me out at X at Cory TV. Thanks for listening to Drill Down Earnings, part of 6.5 Media.